Can you have stability, growth, and exposure to a dynamic and evolving industry? Well, it seems you can thanks to Accenture. This company is a bit like a magic wand for businesses in need of help. It provides a wide range of services and solutions in strategy, consulting, digital technology, and operations. It is present in over 120 countries, serving clients across various industries. And it is a leader in helping companies make the most of the digital world. So you have the stability thanks to diversification. You get the growth. Just look at the revenue. Since 2005, it went from 14 billion to over $61 billion in a steady and consistent way. And they are involved in some absolutely high-tech projects. So it all seems great, but let's take a closer look and also value Accenture before we decide is it a great investment opportunity. First, let's see who owns this company. Individual insiders. That is an X at 0.1% of the company owned by individual insiders. And we would like to see this number higher than 2%. And are individual insiders buying? That is an X with 78 sell transactions worth around $25.5 million in the last 6 months. And no buy transactions in the same period. And do super investors own this company? That is a check with 7 super investors. And are they buying right now? That is an X, but by a very small margin. They bought around 368,000 shares in the last 2 quarters and sold 390,000 shares at the same time. So nothing to really consider as a trend. And how is the financial health of Accenture looking? Return on invested capital. That is a check at 46.9% 10-year median returns. And we want to see this number higher than 10%. So that is quite an exceptional result. And how does the free cash flow growth look like? That is an X at 8.5% 10-year compound annual growth rate. And just as with return on invested capital, we would like to see this number higher than 10%. So we are close, but not close enough. And what do we know about net profit margin? It is a check at 11.3% compared to the sector median of 3.1%. And Accenture's margin is going up steadily. 10 years ago, it was just over 8%. So that is really impressive. And now let's take a look at share buyback. It is a check. They bought back over 9% of their shares in the last 10 years. Very nice. And how is the debt looking? It is also a check. They have almost no debt. The long-term debt is less than $46 million and they have close to $8 billion in cash. So no problem here. And does Accenture pay any dividends? It is a check. The dividend yield is 1.6% and you get $4.48 per every share annually. And the payout ratio? That is a check at 37.6%. And we want to see the payout ratio somewhere between 20 and 50%. So that is very nice. We get a decent part of the earnings, but at the same time, a bigger portion of it stays in the company to help it grow. And what about dividend growth? It is a check at 10.5% 5-year growth rate. So that is very, very nice. Okay, so now let's value this company using a discounted cash flow formula. PE is 25.8. So at the first glance, it does seem that it is expensive, but let's see. We will have to estimate the growth of Accenture for the next 10 years, and we will make 3 scenarios: low, medium, and a high one. And in the low scenario, we will estimate a growth of 5% for the entire 10 years. In the medium, 8% and then 7%. And in the high scenario, 10% in the first 5 years and then 8%. So with such estimates, the intrinsic value in the low scenario is $228, in the medium $272, and in the high scenario $303. But we have to always add a margin of safety to those prices. I use a 30% one. And with such a margin we get, in the low scenario, $159, in the medium $190, and in the high scenario $212. And the current price is around $266. So the high and medium scenarios are in the green, but unfortunately only without the margin of safety. So it seems that Accenture is a bit overvalued, but not by much, and they have some great financial results, nice dividend, and I really like the fact that they have almost no debt and a lot of cash. So maybe it is a company to keep an eye on, especially if the price drops a bit more. This analysis will of course be added to our stock ranking, in which we compare all the companies we analyzed on this channel, and we use up-to-date prices to help us find the best bargains. If that sounds interesting to you, then please visit our Patreon page.